What if I told you you could buy a 4-unit property, live in one of the units, rent the other three out, and live in your property completely mortgage free and buy that property with zero down? This is not a loophole in the VA loan. This is not a get rich quick scheme. It's actually using the VA loan the way it's meant to be, building wealth in real estate and investing. My name is Mark Deacon. I'm a mortgage loan officer. I specialize in VA loans. We operate in 49 states, every state except for New York. And we've helped hundreds of military families and veterans buy a home with zero down using their VA loans and build massive amounts of wealth. A little background on why you should listen to me. I am a veteran myself. I served in the Canadian Air Force for almost 10 years. I was married to somebody in the US Air Force, and we have used the VA loan in the past. So not only have I used it personally, I've been helping military families for over 12 years use their benefits as well. Here's the thing that most veterans don't realize. The VA loan is not only meant for single family homes. You can use your VA loan to buy a property up to 4 units, a duplex, a triplex, a fourplex, one loan, zero down, same benefit that you'd use for a single family home. Now, there's one rule you have to follow that makes this work. You have to live in one of the units. It has to be your primary residence, and that's how the VA loan was designed. It's designed to get you into a home, not really meant to be an investment tool, but used right is one of the best investment tools out there. So here's where it gets very powerful. You live in one of the units, you rent out the other unit, 2 units, 3 units, and the rent that those tenants are paying covers most, if not all, of your mortgage. So you're living either very cheap or very free. This is called house hacking, and the VA loan is the best way to do it. It's the only loan program out there where you can buy up to a fourplex with zero down. Let me show you the actual numbers so that you truly understand. So let's assume we're looking at a $600,000 fourplex to live in, owner occupied. There's three major different loan types. It's FHA, conventional, and the VA loan, and each has their pros and cons. So we'll start with FHA. FHA is going to require 3.5% down, so around $21,000. It's going to have upfront mortgage insurance as well as monthly insurance, mortgage insurance for the life of the loan. A conventional loan, a little bit higher down payment, usually a bit higher rate, but it's 5% down minimum. So about $30,000, and you're going to have mortgage insurance until you have 20% equity. In fact, 22% equity exactly before it drops off. On a VA loan, you're going to have no money down, no mortgage insurance. You will have a VA funding fee, but that's minimal. And no mortgage insurance for the life of the loan. And you'll typically have a lower interest rate than on a conventional loan. So you're able to buy a home that cash flows with zero down, in many cases, zero closing costs, with the tenants paying the rent of the other 3 units. So let's assume that a $600,000 property, the mortgage is $5,000 a month. You're going to live in one of the properties. The other three are going to rent out for $1,500 each. That's $4,500. You're now living in this property for only $500 a month, as long as you live in it. Now, when you PCS to the next base, or you purchase, or you decide to purchase the next property, you're going to rent out that fourth unit, and now this fourplex is receiving $6,000 a month to pay that $5,000 a month mortgage, and you're going to repeat this as many times as you can until you run out of entitlement. Now, if you're active duty, this gets even better. You're already receiving your BAH, your basic allowance for housing, which is a tax-free allowance that you receive for housing, whether you decide to rent or own. So picture this, the tenants are covering most of the mortgage and your housing allowance is covering the rest, that tax-free money. So you're building equity in a $600,000 asset without putting any money out of your actual pay, and with the tenants paying most of the mortgage, while you're actually pocketing money every month as opposed to living in base housing where you're giving away your entire housing allowance. So here's something that a lot of people miss. I'm going to reiterate this, is that when you eventually PCS and move out of that unit, you can now rent out all 4 units and buy another property at the next duty station. So the property that was your home becomes a strict rental property with all 4 units rented out, cash flowing $1,000 a month, and at your next duty station, you do the exact same thing again and again and again. By the time you retire from the military, you could have 3 or 4 rental properties or 10 to 12 doors or more, each cash flow and building you actual wealth. Now, during that time, not only were you receiving cash flow, the tenants were also paying the mortgage down and the property value was going up. So it's very, very realistic after a 20-year career that you've created about $1 million worth of net worth in real estate with cash flow that's going to overcome what you're receiving in your pension. So you'll make more money from your real estate investments than you will in your pension. So now when you retire, you've got your pension potentially VA disability and rental income from 12 doors. This is the ultimate hack to building wealth in real estate and what everybody should be doing. Now, it's really important to work with an expert when you're looking at multifamily homes, especially with a VA loan, because there's a lot of things that could kill any potential deal that you're looking at. The first mistake that kills deals is not counting rental income properly. Now, even though we've said the rental income can cover your entire mortgage, you cannot use the entire rental income as qualifying income. In fact, you can only use 75% of it. So when running the numbers, you need to make sure that 75% of the rent is covering as much as you need to be able to qualify for the next property. Mistake number two, ignoring the self-sufficiency rule. So on 3+ units on VA loans, there are rules in place where the rent has to cover a specific margin of the mortgage, and that depends on the property, so it varies. Number three, forgetting cash reserves. Now, you can buy a multifamily home with zero down and zero closing costs, so zero out of pocket, but you are going to have some reserves. That's typically 3 to 6 months of the mortgage payment sitting in reserves. Now, you don't need to use this money, you just have to have it. And this could be a combination of what you have in the bank, TSP, anything like that. Mistake number four, probably the biggest one, is using a lender who's never done one. When you're buying a home with a VA loan, or even a single family home, you want to make sure that your lender specializes in VA loans. But even more important when it comes to multifamily, because there's so many different things that can go wrong and so many different mathematical problems that could cause future issues on your next purchase property or 2 or 3 down the road. So here's the bottom line. The VA loan lets you buy up to a fourplex with zero down, living in one unit, having your tenants build your wealth for you. It's the single most powerful wealth building tool that you've earned through your service, and almost nobody uses it this way. So if you're thinking about doing this, the most important move you can make is talking to a lender who actually understands multi-unit VA loans before you start shopping. That's literally what I do. I put together a free VA homebuyers playbook that's going to talk about this strategy as well as others to build wealth in real estate using your VA loan. I put a link down in the description below. If you want some more information, you can always schedule some time with me. I'll put the link to my calendar down below. This is a benefit that you've earned, so let's make sure that you use it and use it to the maximum potential that it has. If you want some more information like this, we put out videos every single week, so please don't forget to follow our channel and like this video and put a comment below if you have any other questions.